Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be providing an update to the bull market support band. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. So the bull market support band, again, consists of the 20-week SMA and the 21-week EMA. SMA standing for simple moving average, EMA standing for exponential moving average. The 20-week SMA is now at 49.3K. The 21-week EMA is around 51.1K. So we're actually still well above the bull market support band. In fact, if we were to go take a look at the extension from the 20-week SMA and we just look at the short-term bubble risk, you can see that we are, in fact, elevated by about 40% above the 20-week moving average. If you look previously at the runs that we had back in April of 2023 and in December of 2023, you can see that we only even got about 40% above the bull market support band before we slowly came back down to it, even though in both of those cases, the price actually went a little bit higher before fading back down. But it is not clear to me if that is the phase that we're in. I almost wonder if we've sort of definitively entered the next phase, right, which we've been talking about for a long time, and that is my base case. But again, I'm trying to remain open-minded to a retest of the 20-week SMA. And maybe I'll talk a little bit about that later. But the reason is because when you get into a period like the one we're in now, where it's been about 6 months since we've even been at the 20-week SMA, the implication is that, well, once we do finally test it, there's a good chance we might not actually hold it as support. The best examples are to just look at the last 3 bull runs that we've had. Look at what happened in 2020 to 2021, right? We left the bull market support band in October, and then we tested it in May. Coincidentally, here we left it in October, right? I mean, so it's actually very familiar in that sense of sort of leaving it in October, and then here we didn't actually test it again until May of 2021. I don't know if that's going to happen again, if it's going to take, if it'll take until May, if it'll take some time later, but we'll talk about a couple of different scenarios there. So 31 weeks, but the issue is that once we tested it, we were unable to hold it as support, right? And then we had a summer lull, the implication being that we were too ahead of schedule in the market cycle, that we sort of needed to fall back a little bit, right? So if you're not familiar with what I'm talking about, if you look at the Bitcoin ROI from the cycle low and you just look at what happened in sort of this green, the last cycle, the green line, we got really far ahead of schedule, and then we ultimately had to come back down to earth for a little bit. And so the argument is now comparing this cycle to the last one, that could eventually happen where we're so far ahead of the 20-week SMA that we have to go into a risk-off period, maybe sometime later this summer. So then the question is well, how long will it actually take? But I mean, I would like to say there are other examples besides this one. This one obviously took 31 weeks. I don't think you should take that one as the reason why the Bitcoin breaks below the 20-week SMA in May. There are other examples as well. For instance, in 2019, it took about 25 weeks to get back down to the bull market support band. But in 2017, from this level here, when we left it in September, we got back down to it. We wicked to it in January, so 18 weeks later, but we really had a weekly close back below it 20 weeks later. Now, look at what happens when you test it every, say, 3 months or so, 3 to 4 months. You're much more likely to hold it as support, right? You can see that fairly clearly. When it's only about 3 to 4 months in between tests, we have a much higher likelihood of actually holding it as support. But when you go 25, 30 weeks, at least what the last 3 bull runs would show, right, the tail end of them, right, here, and here, is that then you might not actually hold it as support if you were to go back down and retest it. And so there's several potential signals that I think can tell us if we're about to test it or not. The first of which is the 8-week moving average. So as long as we're above the 8-week moving average, then the party goes on, right? I mean, everyone feels pretty good. Altcoins are pumping. A lot of them are still bleeding against Bitcoin as the Bitcoin dominance is going higher. I'm not going to apologize. But the 8-week SMA is sort of that line in the sand that tells us, hey, as long as we're above this, the party goes on. If you break the integrity of that moving average, then you might start to see some of that fear creep in to market participants. And what the thing to look at here is just look at the last couple of cycles with Bitcoin and the 8-week moving average. You can see we did wick below it right there in 2019, and then we had another push higher, similar to what we're potentially experiencing now. But as long as the 8-week SMA was held, everything was fine. Once the integrity of the 8-week SMA was broken, that's when you slowly grinded back down to the bull market support band. Same thing that we saw in 2021, right? As long as the 8-week held as support, everything was fine. Once you broke it right here, that was when the party was over. And then we had to slowly go back, well, maybe not so slowly over here, but we went back down to the bull market support band. So I do think that 8-week moving average is very relevant, at least in the last couple of cycles. It wasn't as relevant over here in the 2017 one, especially going into that final parabolic rally, but it was relevant in the last couple of cycles. And I've often argued that I think the current run is a combination of the 2019 cycle and the late early 2021 cycle, in the sense that you're putting in new highs like this cycle over here, but we are in a high interest rate quantitative tightening period like in 2019. So there's kind of elements of both. It's not really 2019-esque because we didn't actually put in new highs in 2019. It's not 2020-esque because we're not looking at low rates, and we're not looking at, quantitative easing. There is still money printing going on, right? Let's not kid ourselves. But the environments are slightly different. So I think it's a combination of both of those. But what I would say is the way in which to sort of identify when that shift potentially comes from risk on to risk off is keep an eye on that 8-week moving average. As long as we're above that, the party goes on, right? And that is currently at around 61.2K. So still well below the current prices. Looking at things on a shorter time frame, I wanted to take a look at what happened going into the spot ETF. So we talked about how a lot of people are sort of assigning these narratives to all these different price movements. I think that's fine and natural. But if you look at what happened going into the spot ETF, what you'll notice is that we set a low about a month before, right? So the week of, or really mid-December, we set a low. And you can almost argue that we did something very similar over here. We set a low in early March. Now, what you'll notice after Bitcoin set that low, it didn't really take it out until after the narrative that was on everyone's mind was over, okay? So remember what that narrative was it was a spot ETF. So what happened was Bitcoin rallied into the spot ETF at approximately $48,000, right? And I think there were a lot of shorter term traders thinking, well, okay, well, now we're no longer going to take that low out. But in fact, we did take it out. It just didn't occur until after that narrative was over, right? After the spot ETF launch was it sort of made people think, all right, it was a sell the news event. We came back down to 39K, 38, 39K. I put out a video here saying, look, this might not be what it seems to be and a sell the news, because this is still a 21% correction, still in line with all of the prior corrections that we've had this cycle, about 20 to 21%. So in that sense, to me, it made sense to be open-minded to the idea that you could just come back down here, sweep the low, and get another run higher, even though we had already gone all the way up to $48,000. So are we repeating the same thing where we set an initial low and then we kind of come close to it, but we're not actually taking that low out, at least not yet? And here you can see there was actually a number of times where we came fairly close to it as soon as a week before the narrative, before the spot ETF launched itself, right? Even a week before, we were relatively close to it. So I do wonder if something like that is repeating, where we are, we're unable to take out that low. Does Bitcoin run the highs going into the halving, right? The same way that it put in new highs going into the spot ETF, does it do something very similar going into the halving? And if it does, do we sort of run into the same narrative once again, where does it become this idea of, is it a sell the news event where it goes back down and sweeps the low, or is it a real sell the news event where we are actually shifting from risk on to risk off? one of the things about these sorts of moves is that, at some point, and again, I don't know, at some point, right, in our future, there's going to be a time where we put in a low, everyone piles in to buy that low because they look at what's happened every other time that we got back down to those lows. Even if you look over here in 2023, right, we sort of swept the lows. We didn't actually take it out, but we got pretty close, kind of like right here. We got pretty close here. We actually took it out. There's going to come a day in our future where we sweep the low, everyone piles into it, and then what ends up happening is, like, imagine sort of this is the line. It goes down, it sweeps it, everyone piles in following the prior pattern, and then it comes back up, and then it actually goes to risk off. So how do we identify, right? How do we identify that shift from risk on to risk off? Well, if you watched our feature-length film yesterday on dubious speculation, which I'm not going to spend a lot of time going into right now, at least explaining the mechanics behind it, but risk on to risk off occurs when alt Bitcoin pairs break down. So just kind of going back to that idea that we previously said, as long as alt Bitcoin pairs are all the way up here, there's still liquidity that Bitcoin can tap into. Once alt Bitcoin pairs theoretically take out that low, that is where the shift from risk on to risk off begins. So throughout all of this period here, risk on continued, but it was because, in my view, that alt Bitcoin pairs have not broken down. Just like Bitcoin continued to sort of climb that wall in 2019 up until alt Bitcoin pairs finally broke down. So that is, I think, the signal to look at. It's not just trying to figure out, oh, well, is this time it? Is there another narrative that we can cling to see Bitcoin go higher? I don't really think it has anything to do with the narratives. I think it has more to do with liquidity and monetary policy. I do think the halving plays a role. I do think that it really does have an effect. I'm not of the opinion that it has no effect. I do think the halving, certainly it brings people in. There's a lot of hype. In fact, there's more hype going into this halving than there ever has been before. If you look at the risk levels on Bitcoin, the risk on Bitcoin has never been this high going into any of the prior halvings, right? So certainly the halving does seem to have some formative effect, and maybe it's related to sort of the spot ETF as well. But if you're curious, what I would think, again, not financial advice because I could be wrong, but what I would look for to understand like where that shift from risk on to a risk off period comes in, it's when the altcoin market breaks down against Bitcoin. Now I know, that alt Bitcoin pairs are up right now, but even going into the spot ETF, they were up, and then they dropped very, very quickly the week of the spot ETF. Now the Bitcoin halving is only about a few weeks away, right? So I'm under the impression that alt Bitcoin pairs will come back down to these lows as we go into the halving. Now, whether Bitcoin sweeps the low after that is up for debate, or maybe it sweeps the low beforehand. If Bitcoin sweeps this low after the halving, right? If it sweeps the low after the halving, and then you're wondering, is it like this? Is it like this? Because in order for it to sweep that low, it would actually have to go below the 8-week moving average at this point. Remember, the 8-week moving average is an important line in the sand. Sorry, the 8-week SMA is currently at 61K, just over 61K. So in order to sweep that low, it would have to go below it, just kind of like it did over here, but it was only a couple of wicks below, and then we got right back above the 8-week moving average. So that is something that I think will come into play at some point in our future. But does it happen before the halving? Does it happen after the halving? I don't know. And if we do end up going back down and sweeping it, is it a repeat of this one? Or is it something different, right? Is it something different? And I don't know the answer to that question other than to say, I think the guiding light to tell you if it's like this one or if it's different would be if alt Bitcoin pairs have broken down or not. If you look at going into the into the spot ETF, alt Bitcoin pairs took a really big hit, right? But they didn't actually go back down to the low. And so then in later January and February, alt Bitcoin pairs continued to bleed as Bitcoin really took out that sort of narrative high, right? that's when Bitcoin took out sort of the sell the news event high. But it was only able to do that because alt Bitcoin pairs had not broken the integrity of this low all the way down here. So if alt Bitcoin pairs by, say, the week of the halving are, let's say, same level as here at around 0.44. So if we go into the halving and alt Bitcoin pairs are at 0.44, then you could get a repeat of what happened where you kind of come back down and sweep the low, but then perhaps there's enough liquidity to sort of take it higher into May. Remember, in the 2019 bull market, Bitcoin rallied until 1 month before the first rate cut. I am not under the impression that we have to mimic exactly what happened back then. If you look at the S&P 500, sometimes it rallies until the first rate cut arrives. Like, sometimes it rallies and it rallies well after rate cuts have arrived. There's all sorts of different examples. But looking at 2019, you can see that Bitcoin rallied basically until 1 month before the first rate cut. And again, as we've mentioned previously, the first rate cut is, according to the data right now, is suggested to be June of 2024. Now that could change depending on how the incoming data looks, but right now expectations by the market suggest June of 2024. So if it were to repeat 2019, then that means it could go all the way out until May. So does Bitcoin do something similar where it rallies into the halving? Alt Bitcoin pairs are not actually broken down, and then it gets another rally in May? Or do alt Bitcoin pairs break down in April? Do they break down in April? If they break down in April, then you might get a similar type of move as 2021, where May ends up being a lower high. And that's where, you could see the rest of the altcoins break down that didn't break down on the April move. If, on the other hand, alt Bitcoin pairs are at 0.39, or if they're at 0.44, like they were back over here at the spot ETF, then it would imply there's still more liquidity that needs to move from the altcoin market back over to Bitcoin. So going back to the idea of sort of the 8-week SMA and the bull market support band, what I would generally say is, as long as we are above the 8-week SMA, then it still remains an uptrend, right? It still remains a risk-on environment where people continue to celebrate and our party hats are on and we just continue to go higher. Below the 8-week SMA, things obviously become a little bit less clear, and then you might end up testing the bull market support band. There's a couple of points I'd like to make, and one of which is this idea, and I haven't really spoken about this potential outcome as much because it really hasn't been my base case, but I do think it's at least worthwhile to mention it on the off chance that the unemployment rate comes in a lot hotter than people expect in April. The only reason I say this is because if you go look, and maybe I'll do a whole video on this, but if you look at the logarithmic regression bands for Bitcoin, this was created, I created this back in like 2019 or something. I created it like way back over here. And I probably should refit it, but I mean, at this point, it still is doing an okay job. So I'm like, well, if it's not broke, why fix it? As long as it wicked below it over here in 2020. So why not leave room for it wicking below it over here in 2022? But the only thing I would point out, and again, it's really not my base case. I need to go to a chart that actually has more Bitcoin history. But what you'll notice is that at every halving, Bitcoin was at the fair value, right? So in May of 2020, Bitcoin was at the fair value. In July of 2016, Bitcoin was at the fair value fit to quote unquote non-bubble data. Same thing in, roughly November of 2000 and, November of 2012, right here, you can see that it was more or less at the fair value fit to quote unquote non-bubble data. So looking at it today, that level would actually be at around $50,000, would it not? You can see that the bull market support band is now going into that fair value spot, right? I mean, what are the chances that right around this time, right around the halving, the bull market support band finds itself right at the fair value? So fit to non-bubble data. Because a lot of people say, what do you mean by fair value? It's just basically the fair value fit to all of these prior data points. So that is a scenario that we have not really explored a lot, right? I haven't really explored that scenario because I'm only really interested in the bull market support band once the 8-week moving average breaks, right? Once the 8-week SMA breaks, then the 20-week SMA comes into play, right? So what I would say is if the 8-week SMA breaks before the halving, right? And we then go back down to the bull market support band, just know that it would actually correspond to the fair value fit to prior non-bubble data at prior halving points. So I don't want to pretend like that scenario can't happen. You know, I know everyone's excited right now, and look, I honestly, why not? I mean, Bitcoin's at 70K, right? But that is an area that I would say it would, I think, merit some attention if we were to go below the 8-week SMA, would be sort of the prior highs at where the spot ETF was. Now, again, my base case is that it's risk on until alt Bitcoin pairs break down. The way in which something like that would occur, where you go to, say, the bull market support band before the halving, would be if you get a scenario where alt Bitcoin pairs break down on a Bitcoin dump rather than a Bitcoin pump. It doesn't happen that frequently. If you look at sort of prior examples, a lot of the times where alt Bitcoin pairs break down, it's actually on Bitcoin rallies. In fact, all three of these breakdowns that we saw last cycle were on Bitcoin rallies where alt Bitcoin pairs broke down. You might say, well, July 2018, that was a bear market. It was a bear market, but it still was a Bitcoin rally that really broke them off support, right? You can see it was this rally right here, and that it was on that local top that alt Bitcoin pairs broke down. And then here they broke down on a Bitcoin local top, and then here they broke down on a Bitcoin local top, right? So you can see that all prior cases in the prior cycle where all Bitcoin pairs broke down, it was in fact on a Bitcoin rally, right? It was on a Bitcoin rally. And this cycle, right? If you look at this cycle, you can see that there is this area right here where we broke down in March of 2023, but it ended up being on you can see this was a Bitcoin rally that alt Bitcoin pairs broke down. So will it be a Bitcoin rally that breaks alt Bitcoin pairs back down to support, or could it theoretically be a Bitcoin dump? If you're not, thinking that's a likely scenario, I could agree with you, honestly. But there is an example right here in May of 2022 where alt Bitcoin pairs actually did run the lows on a Bitcoin dump. So again, I think it would only morph into my base case if we find Bitcoin below its 8-week moving average sometime between now and the halving, right? So if sometime between now and the halving, Bitcoin is below its 8-week moving average, then I think this could come into play where you're going back down to the bull market support band at, say, the fair value fit to non-bubble data around that time. And then it could theoretically correspond to alt Bitcoin pairs going back down to the lows on a Bitcoin dump rather than a Bitcoin pump, just kind of like what happened back over here. And then over there, we know that alt Bitcoin pairs bounced for a while, and then they didn't actually break down back down below for a while longer. But that is something that I would keep in the back of your mind, right? With investing, it's easy to get tunnel vision and assume that it's only going to play out one very specific way, right? Where and again, I'm guilty of this. I'm not blaming you guys. I'm guilty of this. I'm saying, like, this is what I fall into sometimes, is that it's easy to get tunnel vision and assume that it's only going to play out one specific way, and I'm kind of in that right now, in the sense of it's hard for me to imagine a scenario where the dominance of Bitcoin is not higher in 3 months than it is right now, right? It really is hard for me to imagine a scenario like that. I think that dominance of Bitcoin will be going to 56% either in April or May. I feel very strong conviction that I could be catastrophically wrong about that. It wouldn't be the first time, but it is easy to get tunnel vision, and that's why I'd like to try to present different paths, right? And the obvious path that everyone is more so interested in, and probably the base case, is that Bitcoin sort of sees a spike going into the halving. It doesn't mean it has to see a spike this week or next week. Obviously, it's up right now. But that would sort of be the base case of seeing something like that. What could derail that, right? What could derail a rally into the halving, or at least put it on pause for a couple of weeks where it's not as pronounced. Because, at one point it seemed like we were going to rally into the spot ETF, and then it seemed like we weren't, right? And then we did. Bitcoin rallied all the way up until early December, and then it didn't really do anything for a month. And then the week that the spot ETF launched, it spiked and put in a new high. But it sort of seemed like it wasn't going to. It sort of seemed like we were just kind of faltering. So, if something like that were to happen where it seems like we're faltering, what could it be? What could it be? And I would say what it could be is if the unemployment rate comes back in next week, and instead of 3.9% or 3.8%, what if it comes in at 4% or 4.1 or 4.2? That could theoretically lead it to falter. It still doesn't mean you couldn't get a spike into the halving. I mean, that's exactly what happened over here. But that is at least something to consider. One of the things we talked about in the dubious speculation video was the idea of sort of these waves where you get sort of, you get your first wave, your second, and then your third, right? Your first, your second, and then your third. Here it even had it happening again, right? Your first, your second, and then the third one was a failed. It was a failed one where it wasn't unable to really durably take out those highs. And so here you have again 1, 2. Do we get a third? Right? Do we get a third? My guess is that if we do get a third, if we do get it, my guess is that it will be on the breakdown of all Bitcoin pairs. Right? That is my guess. Where alt Bitcoin pairs finally cave, and that is what I would consider to be sort of the what everyone's watching right now. I would hate for people to get tunnel vision and assume that's the only way it has to play out, because there is a chance that it, we go back below the 8-week SMA. There's a chance we go back to the bull market support band. Normally, I mean, if you look at how long it took in 2019 to test the 20-week SMA, I mean, it was in fact 25 weeks. Right, 25 weeks from here would actually put us the week of April 8th. It would actually be the week of April 8th, which coincidentally, the week of April 8th, if you go look at alt Bitcoin pairs, and you look at, let me get rid of some of this stuff. If you look at alt Bitcoin pairs here, from this low, they broke down 41 weeks later. So 41 weeks later from that low puts you the week of April 8th. So again, who knows? Who really knows? My only point is that alt Bitcoin pairs should be the signal as to whether Bitcoin can go a lot higher or not. Below 0.39, I think it's a risk-off environment. Or below 0.4. We're now at 0.48. But below 0.4, it's a risk-off environment, in my view. Above that, who really knows as to exactly what it's going to, I know people putting out price predictions left and right, but I don't know what it'll end up being. I would say that there were some lessons to be learned by the rally into the spot ETF, where it sort of seemed like the market just kind of died for a little bit. Then you had a spike, made people think it was sell the news, come back down, sweep the low, and then run. If we do something like that again, if we sweep the low, the question on if we run after that, I think, will be dependent on if alt Bitcoin pairs have broken down or not. If, on the other hand, alt Bitcoin pairs are still at, say, 0.46, 0.45, and Bitcoin is rallying and putting in new highs, then I would look for that shift from 0.4 to 0.39 to potentially mark that change in market dynamics, market sentiment, etc. So again, the bull market support band right now is 49K to 52K, or 49 to 51.2. So a good bit below where we currently are. The only way I think we really have a chance of getting back there anytime soon is if the labor market comes in a lot weaker than people think. If that happens, then we could go back to the bull market support band in April. But as long as that isn't the case, and the labor market holds up, then I think you're just looking to see if the 8-week SMA holds that support. As long as that does, the party can continue. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. I'll see you guys next time. Bye.